this is Raman Gill. Welcome to another episode of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today we'll take a look at how to trade using moving averages. If you are looking to trade using an indicator, moving averages are a good one to look at because they help you stay with the trend. So let's go on to the charts and we'll take a look at what moving averages to use, how to identify the right time to enter the trade, where to place your stop loss, and most importantly, how to exit the trade with a profit. Here we'll take a look at how to trade moving average crossover. We have two moving averages here, a 50 and a 100 EMAs, exponential moving averages. When we see the fast moving average cross the slower one to the downside, that shows us that price is likely to continue to the downside. Whereas when we see the crossover of the slower moving average by the faster moving one to the upside, that means the price is likely to move higher. So in this case, 50 is our blue one. We see that the blue one crosses the 100 one to the downside. So this is faster moving, that one is slower moving. So as this crossover happens, we know that price is now likely to continue lower. So in this case, we wait for the crossover, and that will happen after this candle closes here. Once this candle closes and we see that moving averages have crossed over, we take the entry short here and our stop can go on the other side of the crossover. We want to make sure there is enough room for the trade to breathe. And then we stay with the trade as long as price is moving lower. It comes and tests the moving average here once, but then it stays lower, so we continue on with it. And then we see that price starts to pull back and it closes above our faster moving average. So in this case, we can exit the trade here, or you could also wait for it to cross to the other side of the slower moving one. In that case, we would be giving back more pips. So it's a choice whether you want to close your trade when the price closes above the faster moving average or the slower one. So in this case, we'll just exit here from entry to exit. We get 195 pips in our trade. So just to recap, this is Euro Aussie 1 hour chart, and we are looking for trading moving average crossover. So we have two moving averages, 50 and 100. When we see the 50 crossing the 100 to the downside, that shows that price is likely to continue lower. And we go and take an entry short. So this is our entry. Our stop would go above the pin here on the other side of the moving averages, and we stay with the trade as long as price is below our moving averages. And when the moving averages spread out like this, that shows that price is moving to the downside. The momentum is to the downside, so we can stay in the trade. And then we see that price starts to pull back. So we are giving back some of our profits. Moving averages tend to be a lagging indicator. So combining price action with moving averages can be a good tactic to use. But just from moving averages perspective, we would close our trade out when price crosses the faster moving averages and closes above. So from entry to exit here, we get 195 pips in our trade, and our profit is $1,950 if trading one standard lot. Thank you for joining me today. I hope you enjoyed this episode. If you would like to see more great trade setups like this, I invite you to like, comment, and subscribe to the channel. That's it for today. I will see you next time.